it's Friday and we have reached a local market bottom, but a local market bottom of this local move right here, this wave 4 move. So this is how I'm seeing it as an analyst. I'm thinking full moon, I'm thinking local market bottom. I'm seeing a very likely probable wave 4 complex correction, right? A triple three complex correction, and I'm seeing that we're at the base or the support level of that complex wave 4 correction. So that to me is a local market bottom on Friday, right? So I'm likely saying if this is a local market bottom and it's Friday, it's a full moon, then I'm looking at the weekend as a more likely than not move to the upside. Another reason the move on this weekend, Saturday, Sunday, is likely, despite the fact that the US dollar currency index and financial markets aren't moving, is this. This is crucial. Hello everyone, my name's Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the risks of Bitcoin as a proxy for the cryptocurrency markets at large. Today is October 27th, 2023, and we're going to talk about why it's very likely that we may pump into the weekend just as we did last week, okay? We may pump into the weekend and actually earlier into the weekend than last week, given what I'm seeing in the charts. Guys, if that sounds interesting to you, then watch until the very end. Hope everyone had a great week and is having a great day. So let's start off with Bitcoin on the hourly time frame. Here's what I believe that we're seeing with a high degree of probability. All right. If you've been following my updates, I've postulated that what we have here is a pure impulsive move. And I'm counting 5 or 4 Elliott waves up until now, right? I'm counting this as the first and the second, and then this right here is our third wave, the most impulsive, the fastest moving wave. This is the move that we got starting on Wednesday, actually, and all the way into Monday, right? So this move lasted about 5 days, and we got it all the way to the 1618 to 2 Fibonacci extension of this wave 1. So a lot of indications that lead me to believe that this indeed is a wave 1, wave 2, wave 3 situation, and now we're in the wave 4, right? Not only is here, let's pull out the Fibonacci extension tool really quickly just to really hammer that home. So if this is wave 1, wave 2, and again, remember, in Elliott wave theory, wave 1 and wave 2 should take around the same time. And if you measure the time it took for wave 1 to form and the time it took wave 2 to form, you can see there's some comparability in terms of the time component. Furthermore, the retracement of wave 2 should be between 0.5 to 618. Actually, technically 382 to 618 Fibonacci retracement of wave 1, but typically 0.5 to 618 Fibonacci retracement of wave 1. We have that. So we have a very likely wave 1, wave 2 situation. And then as you can see very well here, using the Fibonacci extension tool of our purported wave 1, wave 2 retracement, wave 3 ends right between the 16182 Fibonacci extension where you would expect wave 3 to hit. That's the orthodox high of wave 3 right here, okay? And subsequent to that, and this is what we've been dealing with all week, is our quintessential complex wave 4 correction, okay? For those of you who know Elliott wave, this is unsurprising because wave 4 is typically complex. Wave 4 typically chops sideways. Wave 4 typically takes a while. Wave 4 typically retraces between the 236 and the 382 Fibonacci retracement level of wave 3. So again, using this point as my orthodox top for wave 3, and this is the bottom of wave 2, so this is the entirety of wave 3. Look, wave 4, or a purported wave 4, chops right where we expect it to. It hit the minimum retracement of 236, right, at 33,000, and it's right in that region, right, the 236 to 382 Fibonacci retracement level. And zooming in just a bit, jumping down into the hourly time frame, what I'm seeing in wave 4 is a WXYXZ, a triple three complex correction, right? For those of you who don't know what a triple three is, it's when you have wave 1 or WXYXZ. This is one of the complex corrective patterns that you see in Elliott wave corrections, okay? Flat corrections. Again, WXYXZ, okay? And this is the final wave, the Z wave. It's impulsive, and I believe with a high degree of probability, this is what we're dealing with here. If I'm looking at my Fibonacci retracement levels, they work out. If I'm looking at my my stochastic RSI momentum indicators, they're all bottomed out here, right? They're all bottomed out right here. So I believe that this is a likely bottom for a move up in Bitcoin, right? This $33,600 level, right? So on the hourly time frame, bottomed out. The 15-minute time frame bottomed out. The 4-hourly time frame bottomed out. So it's very likely on the intraday time frames, this is the end of this complex wave 4 correction, okay? The other thing I want to bring to your attention or remind you of is that our target is not that far away. Our target for Bitcoin for this move was the $42,700 level. We did say, I'm going to hold myself accountable, that it was likely that we hit that target in the middle of the week because Friday, today, was going to be a full moon. And what do we know about full moons and markets, financial markets? Financial markets tend to reach a local market bottom on full moons, right? That's just what the data shows. So with a high degree of probability, I thought, okay, what we're going to do is we're going to blast off, make a 2-day, 3-day move, right? 48-hour move, and then 48-hour move from Wednesday to Friday, and Friday would find us back in this region or even lower, but we haven't moved. And actually, it's Friday and we have reached a local market bottom, but a local market bottom of this local move right here, this wave 4 move. So this is how I'm seeing it as an analyst. I'm thinking full moon, I'm thinking local market bottom. I'm seeing a very likely probable wave 4 complex correction, right? A triple three complex correction, and I'm seeing that we're at the base or the support level of that complex wave 4 correction. So that to me is a local market bottom on Friday, right? So I'm likely saying if this is a local market bottom and it's Friday, it's a full moon, then I'm looking at the weekend as a more likely than not move to the upside. Another reason the move on this weekend, Saturday, Sunday, is likely, despite the fact that the US dollar currency index and financial markets aren't moving, is this. This is crucial, right? This is consistent with our larger read in the markets. If you look at our larger sort of thesis on what's going on here, and let's clean this up right here. Let's just clean up the chart. It's very likely that 42,700 is our target for a few reasons, okay? And this is germane to what I'm going to say, why we're likely to pump this weekend. So stay with me here. 42,700 is the top of this move, right? Why? Because on a retracement level, sorry, let me erase this and then bring this into play. So from the top of this move, right? So if you look at this as a 3-wave move, right? And remember, corrective patterns come in flavors of 3, 1, 2, 3. Okay, and this is the impulsive bit, right? There's A, B, C. C is always going to be impulsive. Even if it's a zigzag, it's going to be impulsive. In this case, I think we got a double zigzag in Bitcoin, right? Sorry. That's 1, 2, 3, double zigzag. In any case, I treat all of this as one big impulsive move, right, the real impulsive drawdown of the bear market, if you take a Fibonacci retracement tool from the top to the bottom of that move, the $42,700 level is essentially at, whoops, I didn't want to erase that. I just want to erase the stray mark. The $42,700 move is essentially at the phi ratio of this move down, okay? Remember, the phi ratio is important going up and down. On the way down, it tends to serve as support in impulsive moves. On the way up, it tends to serve as resistance. So if you take the phi ratio or the 0.618 Fibonacci retracement level of this preceding move, the drawdown of the Bitcoin bear market, what do you get? You get that $42,000, $40,000 thereabouts level, $41,000 to $42,000 level. That's going to be respected. There's going to be some activity there. That's one reason I believe that this is a likely target. And again, I know the subject of this conversation, right, that we're having is, why are we going to move this weekend, Dean? Why do you think that it's likely we move this weekend? Well, stay with me. I'm almost there. Okay, so if indeed 42.7 is a likely target, right? Why is it likely that we're going to move this weekend? It's because of the concept that I keep harping on this channel. High time frame resistances and high time frame supports always have to be retested. Okay, so this right here, right, was definitely, unquestionably, a high time frame resistance for this price action, right? And it took all of what, 100 or 200 days, 200 plus days for us to break out of this range. Okay, you don't just break high time frame resistance and not retest it as support. As it stands, let's get rid of this. As it stands, we've broken out of this W pattern, this range, whatever you want to call it, and now we're free. But we're not, because it's high time frame resistance, 200-day resistance. Let's redraw that. 200-day resistance. What is likely to happen? This is likely to happen. That is another reason why I think it's likely that we get a move on this weekend, because if we do get a move on the weekend, that will essentially create a CME gap. If you don't know about CME gaps, you can look it up on Google, but essentially that means we're moving without liquidity. So it's a false move, if you will, because the traditional markets, the US dollar, isn't giving us the liquidity to move in that direction. So when it does start trading again, that gap has to be filled. And it will, if indeed we do hit this target and do bring about this retracement to the neckline of this 200-day bullish consolidation pattern, Wu-Tang pattern, whatever you want to call it, right? So that's another reason why I believe that we're likely to move this weekend, because if that indeed is our target, once we hit that, it's very likely that we retrace to retest this neckline as support before continuing on in a tried and true impulse to the upside. I mean, all of this is impulsive, but I don't think the party starts until we make this retest back here at the $32,000 level. So that's why I think it's likely that we do this on the weekend, because in the week, what we may see on Monday, Tuesday, Wednesday, if we do indeed move on Saturday and Sunday, is a consolidation, drop, consolidation, pump back up. Okay, so I do think, however you slice it, Bitcoin is likely to pump another 28%, hitting our target, and then I do expect some sort of consolidation before retest of this $32,000 level. Now, what if, because this is technical analysis, it's all probabilistic, we don't have a crystal ball, we don't know what's going to happen. What if we keep going? That's not a good sign. That is not a good sign, because it means you can expect that at some point you're going to get a retracement, and you may even get a deeper retracement. I don't think, but you're, even if you blow past this 42.7 target, you're going to have to come back here if this move is true. If you don't come back here, then this move is fugazi, and I don't know what's going to happen. I really don't. You're not. This is not a real move to the upside unless you retest that $32,000 level. That's all I'll say. Okay. Let's have a quick look at the U.S. dollar currency index and wrap up. Okay. So the USDXY, this is our market maker. This is our liquidity provider, and we need it to break down for Bitcoin and risk on assets to break up. So what are we seeing on the hourly time frames? Well, we're seeing a distributive pattern, okay? A lot of up and down and up and down and up and down in a confined range, okay? If you zoom out, the context of which is a larger pattern that is looking bearish, right? And you can see here, I said this on the last video, you have this move down, this intermediate move up. You should expect, with a high degree of probability, a C wave or a final impulse completing this zigzag, right? You can call it a WXY, double three, or you can call it an ABC. It doesn't really matter. But on the high time frame, what you're getting on the US dollar currency index is likely a WXY, a zigzag rather, irrespective of what you call it. And so you're looking for a move down, a strong move down, okay? What brings this strong move down? I don't know. What real world event? Is it the BRICS players professing, doubling down on BRICS and, shirking the US dollar? Is it the Fed making an announcement? I don't know. But the charts, the technicals tell us that this is imminent. And the technicals tell us, if we zoom into this area right here, that a careful view analysis of this distributive pattern should give us a decent idea as to when this is likely happening, right? I see initial breakup structure, counter, right? That's my first pattern, or that's my first pair of AB basing. This would be my second. I think this is my third. This is my pivot. Okay, this is a small pivot. So I do see this move coming down imminently. I see on the daily time frame, my momentum indicator is telling me the same. On the daily time frame, let's see, on the weekly time frame, I'm also super bearish, super overbought, okay, on the US dollar currency index. So, this move down in the US dollar currency index is imminent. The move up in Bitcoin is imminent. And again, I do see something happening this week, or there's a high likelihood of something happening this week. And I wouldn't worry about gaps. I wouldn't worry about CME gaps this week, just because of the larger context of this move. Guys, if you got value, please like, share, and subscribe. Would appreciate it. Hope you're all well. Hope you're in a position to take advantage of this move. And I will see you next time. Take care. Bye.